Just ask this. Anybody here brand new? Is this your first session? Yes or no? Anesh, good to see you too, my friend. I hope you're doing wonderful. I know you are on your trip, if I'm not mistaken, right? Anybody here brand new, first time they've been here? Okay, Kay, perfect. So for those of you guys in here that don't know me, my name is James Bishop. I do hold a Series 215 and a Series 65. So I am a licensed financial professional as well. And what I have an extensive background and CV, I guess you would say, in all things financial asset management and education related. So I have been in trading and trading education for 15, 16 years now. I've trained thousands of traders. I've been an analyst. I have created courses. I've taught courses. I've hosted trading sessions. You name it, I've done that. I worked one on one with the individuals. Then in 2020, I was going to go and work for a large financial brokerage. And I ended up deciding against doing that, mainly because of how I saw how they manage things. And I ended up becoming starting with a hedge fund and became the vice president of capital markets for a hedge fund. Um, and from there, myself and a very close friend of mine started our own fund. And that has been just going absolutely insane, just doing really, really well. We're up like 30 something percent this year. Then I founded a retirement and estate planning company. That's what my main passion is, right? I manage money for an endowment fund for a university. I manage my own, the fund that we have. I help manage people's retirement and estates all the time. It's what I love to do, whether it's my parents or anybody. And the thing that I will do is I'm going to always treat you as if you were my parents because that's how I view it. I want somebody to treat me that way. And the old golden rule, I live it. Let me tell you, I live it. So, and then because, I just have so much time while my wife and I are trying to build our family a little further and all of that, I have so much free time on my hands. So I just decided to get a doctorate a couple of years ago. And I'm one presentation away now from being in the dissertation phase. So, wish me luck next. Well, I guess 2 weeks from now, I will be giving that presentation to the powers that be and see if I move on to the next level there. So after that, then I'll be Dr. J, just a foot shorter than the one that many of y'all know of. Okay. So I can't dunk a basketball, but I can dunk a golf ball. All right. So let's get on into it. I just share my background because some people know, some people don't. Some people, it's their first time here and they're like, who's this guy that sounds young, but, and is telling me about the stock market. A couple of housekeeping items. One is our Discord channel. It's completely free. Guys, we have people that are posting their trades, they're answering questions, they're sharing their indicators. And look at that, Freddie. Freddie, that is awesome. That is really interesting. We interact here, guys. This is what this is all about. What I want to do is I think that a lot of times trading is lonely because, and maybe this is just me, right? So when I started in trading and stuff like that, it felt like it was just me and my computer screen, right? It just felt like it's like me and my computer screen. So what I wanted to do was create this like Discord channel where we could create a community where people who are trading can help other people. And, once we get the enough interaction in there, maybe we'll go live a few times or we'll transfer it over to YouTube and go off of my YouTube channel and go live on my YouTube channel and interact and all of that. So, there's a lot of people that are trading and sharing information. I want to make sure that you guys can join. So these links, though, they only allow me to create links for 7 days, right? They only last for 7 days. So if you can go ahead, I'm going to send out the link right now to everyone. Let me copy. copy link. So this link, again, it only lasts for 7 days, but you are more than welcome to join my Discord here. And we'll be sharing trading ideas and all of those things. So please feel free to join right now as I go over the next quick thing, which is that on December 21st, 2025, we will have no session. December 21st, 2025, we will have no session. And I'll do weekly reminders until then. I'm going to be out of the state. My brother graduates that weekend, so I'll be up in New York, and so that's where that's where I will be. So let's get into the major announcements of this week. So major announcement wise, we have quite a few things going on. First is PMI numbers, Purchasing Manager Index. That's a manufacturing indicator. It's actually a somewhat leading indicator of inflation. Alton, he goes to West Point Military Academy, so I'll be up in there, and then I'm going to spend a couple of days in the city as well. My wife's never seen the sights in New York at Christmas, so we'll do the tree. We'll do probably Fifth Ave. We'll go to Macy's, all of that. So I love New York. It's one of my favorite cities to visit. I could not live there because I love my dogs too much. We have PMI numbers, Purchasing Manager Index. Purchasing Manager Index is a leading indicator of inflation. It kind of says, hey, are the prices of manufacturing a widget, gidget, or gizmo, is it going up? And if the prices are going up, well, guess what you expect inflation to do? All right. Guess what you expect inflation to do? Then we have my good friend Jerome Powell. We went to separate high schools together, if you didn't know that. But Jerome Powell is speaking, for all the criticism that he takes, which, granted, you're always, excuse the French here, pissing off somebody when you are that person, right? Somebody's going to say you're a genius and somebody's going to say you're an absolute idiot. And that's just the way it's going to be. But one of the things that you have to respect, and I've been through 4, 5 Fed chairs, 6 maybe, since I've been trading and investing. And he's one of the first that I've ever come across that says, hey, we are going to do this. And then they actually do it, which is a rare thing for anybody in any political realm and or face, I guess, public realm to do, right? So that's the one thing I will say I will respect about him. We also have ADP non-farm payroll coming out on December the 3rd. Then we have unemployment claims on December the 4th. And then I think I just didn't put it down there. We have consumer price index coming out on December the 5th, and inflation expectations as well. Now, here's an interesting thing. We're not going to get non-farm payroll this year. We're not. I don't know if you guys know this or not, but basically by an executive order, we're just not getting non-farm payroll and one other announcement. I don't know if you guys knew that or not. How many of you guys knew that? Yes or no? How many of you didn't know that? Type in a yes if you knew it. Type in a no if you didn't. Okay, good. Well, hey, guess what, guys? Today has been a valuable session. We're done. Well, I'm glad that you guys do know that, right? Even numbers that come out likely are not true. I mean, here's the thing. These are actual factual, not just like third party, not just government data, but actual real numbers that all companies have reported, and not even counting government in there. But there has been a year over year, there has been a 65% increase in firing this year. And it's been a the majority of that increase has come from the tech sector as they kind of, they had a lot of bloat and they trimmed down. The other interesting thing that we're not seeing this year is holiday hiring. And I think that's probably somewhere in why we're not seeing these numbers come out as well. Bureau of Labor and Statistics, I've said that it was antiquated for years. They only survey 12,000 households, and of which they have to be present to answer the survey. And if they're not there, if they don't answer the phone, then what are they? What they don't get counted. And so I don't think it's a great ideal, but there is, in October alone, there was over 100% increase month over month in firing, with 150,000 plus layoffs that happened. And that's from the private sector. We can't really count yet because, some of this is still tied up in litigation. The government agencies closing and consolidating and things like that. Okay. So, regardless of, and again, I say this because, and I say things like this because in this realm of financial and managing assets, one of the things that I learned very, very, very early on from someone who is a just absolute amazing trader that's been a part of my life, or was a part of my life while he was still on this earth, but he taught me very early on, and he basically said, look, the market doesn't care what your political beliefs are. Money doesn't care about that. So don't bring it in here, right? Take the numbers for what they are, because the numbers are the numbers, and then the same numbers that everybody's going to look at. Now, you can sit there and you can argue with these numbers and you can say, oh, that's not right. And then you will lose a whole bunch of money. Or you can just put your political beliefs aside. And that's why I always say that, like, in these webinars, my goal is to have you guys look. I don't care if you're Democratic Party, Republican Party, Libertarian Party, Pizza Party, Chuck E. Cheese Party, Barbecue Party, Thanksgiving Party, Holiday Party, Christmas Party, Birthday Party, Pool Party. I don't care what kind of party you want to throw. It doesn't matter to me. Yeah, it really doesn't in this realm. We can have offline discussions. I love having those discussions. But in this realm, money don't matter, right? Um Philip, yes, right. Philip, do you care if I read that out loud to what you said there? Um Exactly, William. I love that. Find the evidence is what he said. So Philip in here says, as a 40-year veteran of the federal statistical community, I can tell you that you're just scratching the surface of what's happening and the problem with the numbers. Absolutely, right? There's one of my favorite quotes by Mark Twain said, there's three lies in this world: lies, damn lies, and statistics. Okay. Um, Lies, damn lies, and statistics. Those are the three types of lies in this world. And this is the truth, right? That's about as true as we can be. But just know the whole purpose of this soliloquy, before I jump down that rabbit hole, is that, look, we're not getting non-farm payroll. There is, I think, obviously, we know that there is a massive wave of unemployment happening, with 150,000 layoffs. We're not going to see too many more layoffs in the month of December, but Q1 of next year, be prepared to see more layoffs than we've seen in a long time. And that's because, consumption on the retail side and is getting slower because of high inflation, high prices, high interest rates, right? Where we have high, and that's never a recipe for buy, right? So, Priyanka, yes, we will definitely get to that. Okay. Let's see. Yes, yes, Jerry, I absolutely understand that. Now we have earnings coming up this week. We have uh Bank of Nova Scotia, CrowdStrike, Marvell, Okta, um oh my goodness, what is that company? ZS. Hold on, it's gonna come to me. Having a brain fart. Oh, Zscaler. Zscaler as well. We have Salesforce, Snowflake, UiPath, and then we have on December the 4th, TD Bank, Kroger, Dollar General, Hewlett Packard. That should be an E, not a W. Sorry about the typo there. You know what? Let me fix that since I always ask you guys to take screenshots of it if you want to. So there it is, screenshotted. I'll click through it. And if you want to, go ahead and screenshot this and type in done if you got it done. Paul, I gotta read that out loud. Paul said, I think if the government stats gave the honest stats, we would react like aliens were invading. Probably. All right, perfect. So many of you guys got that screenshotted. Fantastic. Love it. Now, a couple of things. We're gonna do a couple of different things here today. DocuSign as well. Couple of things that I want to touch on beforehand before we jump into the market. And if we go a little longer today, that's fine. New stocks. Because I don't know if you know this or not, but the Magnificent Seven or the Fine Nine or whatever the heck they were called a few weeks ago, that name's out, and I got to get you with the new name. So here we go. No. It's Batman. All right. That's what we have now. We have Broadcom, Apple, Tesla, Microsoft, Meta, Amazon, Alphabet, and NVIDIA. Okay. And I could even add another M in there if I wanted to with MSTR because we are going to look at that here today. All right. So, of course, we're going to take a look at our Batman stocks. There's going to be a few others that we take a look at, and we're going to jump into those charts. But I wanted you to make sure that you know this terminology because this is the new, right? We got to keep up to date with these things, right? So if you don't have your Batman, then get ready for it. The next thing is I do want to talk a little bit about NVIDIA. I got asked several times to kind of repeat this. So I'm going to repeat one of the areas of one of the problems with NVIDIA that I see, which there are two, okay? One is this, what's called circular financing. Now, many of you probably remember this from the dot-com bubble, because that's what kind of blew up the dot-com bubble. Now, the circular financing is well and good. It works until there's a liquidity event. Okay. Oh, Jerry, I'll go back to that in just 1 second, right? Until there's a liquidity event where there's a demand for to hold heavy cash, right? So how is the circular financing working with NVIDIA? And I talked about this literally almost a year ago when I had covered this. And I said it wasn't a problem yet, but it could pose to be a problem in the future. You see, part of the way NVIDIA works, right, is let's say that I wanted to sell, I see Kyla in here. I wanted to sell Kyla the chips that I'm manufacturing. And I say, Kyla, and Kyla says, well, I'd love to have $1 billion worth of chips. And I say, okay, well, here's $1 billion worth of chips. She was like, but I need some fine. And NVIDIA said, instead of paying us all up front, why don't I just give you some financing? But you got to put something up as collateral. And she goes, well, what do you want as collateral? Why don't I put the chips up as collateral? So wait a minute. Think about this. This would be like the bank telling you that instead of you having to put up your house as collateral, they're just going to give you something. They're going to give you 100 gold bricks, and they're going to use those gold bricks as their collateral for their own loan. Now tell me that ain't crazy. Maybe I'm nuts, you know? Does anybody agree with me that that seems a little fishy, to say the least? And I'm allergic to seafood, right? So, right, that it makes you spin. So it's literally that. It's the same thing, right? Imagine if the bank says, "Here's a gold, a 1 kilogram gold bar, and we're gonna loan you $500,000, a, but you got to put that gold bar up as collateral." And so that's circular financing. Well, NVIDIA's doing that. But then what's happening and what's really interesting is that it goes even a step further. For instance, a couple of weeks ago, literally 2 weeks ago, OpenAI bought OpenAI bought 10 billion worth of chips from Nvidia. Okay. So I'm going to write 10 and I'm going to write a really bad looking B there. Right. So they bought $10 billion worth of chips from Nvidia. Hey, that sounds great. That means Nvidia is doing well. And then what happened? The very same day, not even like a week went by, the very same day, NVIDIA invested $10 billion in OpenAI. So, what? Right? I'm not saying that NVIDIA is not going to go even higher. I am not saying that. What I am saying is be aware of the game, because if you don't know the what's happening in the game and then all of a sudden the rules change or somebody says, "Hey, I need my cash," and we can't just keep passing it back and forth to each other. I need some cash right now because I need to go do some more development or something like that. Then this whole system could, that's what helped cause the crash of the dot-com bubble, was this circular financing. Now, here's where the second issue comes in, and it kind of throws a wrench into the plans, because one of the major companies that was buying from Nvidia this way was a company called Meta, right? We all know Meta, Facebook, they have all those brands underneath them. Meta was buying from here. However, last week, nope, week before last, another company called Google, they announced that they have this new thing called Gemini 3.0. And Gemini 3.0 leapfrogged the competition in its compute power, its hallucination rate, its depth and breadth of knowledge, things that OpenAI would just fail, right? ChatGPT would fail at completing certain tasks. Gemini did it in nanoseconds, right? And it had this massive leap forward. Well, when that was announced, they announced that they trained it on its own chips called TPUs. They didn't use NVIDIA chips. They created their own chip called TPUs. And TPUs seem to be better at processing data, large language models, learning models, development, and all sorts of things better than NVIDIA's GPUs. Well, Meta said, "Hey, we're going to cancel our orders, and Google, we're going to buy from you guys now." So that money said, "Nope, no more." And it went over here. Now, the one issue is that when you use Google's TPUs, you have to use their cloud service as well, which that's fine. But we'll see if other companies follow suit. I tell you that to say NVIDIA, again, NVIDIA is still going. It's still going to move up. It's still going to be a powerhouse company. However, just keep your ear out on the news and your eyes out on the news for anything that references other companies buying into TPU computing power or switching to Google Cloud, right? Also, be prepared to hear if you start seeing these companies, then Amazon, we're going to take that off of a list. We're going to take off Microsoft as well from some of their return, because the three biggest cloud providers, Microsoft, AWS, and Google, if people are going to the TPU side, Google makes money two times, right? Because they get the cloud and they get the TPU. Well, if people are switching, and they may end up switching from AWS to Google Cloud as well, right? So just understand, just listen to that and pay attention. Now, the other thing that I talked about last week that I wanted to share again this week is the yen carry trade, right? Now, we're going to go through two different slides here of the yen carry trade. And first, I'm going to explain what the. Oh, first, let me ask any questions here. Oh, Jerry, go ahead and take a screenshot there. Any questions or any comments or anything you want me to talk about with that NVIDIA situation? Yes or no? No, everybody good to go? Any questions around it? Anything like that? Let's see. How does this impact the CHIPS Act? Dan, it really doesn't change anything with the CHIPS Act. We're still going to be manufacturing it. We're still going to be, because Google manufactures in the US a lot of their chips. So it could manufacture, maybe they broaden it as well. And maybe that will be how that happens. But let's see. Perfect. Okay. So now let's talk about the yen carry trade. Okay. So the yen carry trade, what that is basically for years. I mean, absolute long time. We can go, I'll just throw this gold chart here, and I'm going to go JPY interest. And interest rate. Here we go. JPINTR. So if we look at a monthly chart of Japanese interest rates and we go back, look at that. Hedge fund trender still works. We go back to, you can look through it from 1973, right? They were at 4%, and then they were at 9. They were 9.4% in the 80s, and then this massive drop down in 85, 89, got back up to 6 in the early 90s, and then everything came crashing down. And in 1995, they went to 0.5% interest. Then they actually went to 0% interest for a while. They had some brief blips up, but they eventually went negative in 2015, and they stayed negative until 2024. Think about this. The Japanese central bank was paying banks to give loans. Part of this was aging population. Part of this was, lack of reinvestment. Part of this was, all sorts of things. Consumption dwindling. They have a net mortality rate in Japan, a 50% net mortality rate in Japan. Last year, there were 1.268 million people that passed away, and only 568,000 children born in Japan. I don't know if you know this, but that's not how you grow a population. Okay. And here's the thing with Japan is they have finally gotten back to that 0.5%. However, their bond yields, JPY bonds, see if I can find that. Japan bonds. So if we look at their bonds, and actually bond yields, let me do that. That's so weird. JP. There we go. 10-year bond yields. We're sitting at 1.831%. Now, why is this such a thing? Why is this so worrisome? Why is this a problem? Well, it all has to do with this Japanese yen carry trade. You see, what was able to be done when interest rates were 0 or 0.1 or even lower and bond yields were lower is people in the US, people in Asia, people everywhere in the world, they would borrow money from Japan, right? Borrow trillions and billions of dollars from Japan. Then they would reinvest that money into the US, right? Where into our bond market, into our yield markets. Think about this. You're borrowing at 0.1% and you're making 5%. Well, you pay that money, that 0.1% interest, and you just made 4.9% return, every year. And if you invest in the stock market, it's going even higher and you're making even more. If you're investing in real estate, you're making even more, and it's great and everything is good up until one, US debt gets out of control. Two, there is a kind of fleeing of countries out of the US bond market, which we see that through TIC data, right? We don't see that you can't see that in regular data that we look at on a normal on a chart, but there's something that's called TIC data that allows you to see where money is coming from, the inflows and outflows. And we're getting a lot of onshore Cayman Island funds that are investing in our bond market, and an outflow by China, Japan, Canada, Europe, Asia, Africa. They're all selling our bonds. Actually, China has sold off over 65% of all of the bonds that they held at one point. Think about that. Okay. So, think about that. So we have this crazy bond. Dennis, Dennis, there were 568,000 children born in Japan last year, and there were 1.2, almost 1.3 million people who passed away last year. So they had less than half as many people born as did pass away. And the US is about 7-8 years away from entering that eclipse here. Okay. So what's happening? No, they just sold them. They got rid of them, Deborah. They're off their balance sheet and they're not rebuying. And so what's happening is that since Japan's bond rate is going so high, that means their borrowing rate, their interest rate has gone up. So if you can't borrow at a really low interest rate, then it eats away at your profit. And people aren't going to borrow money to make 1%. They can make that in a bank account. They're not going to borrow money to make 2%. They can make that in a savings account. They're only going to borrow money if they can make 3, 4, 5% off of that. So what's happening is an unwinding of the Japanese Japanese carry trade. And what we're seeing is a strong yen. So if we go and look at the yen index, right? If I go look at the yen index, well, we see that it's coming off of its lows and it seems like it's pushing down, but it's actually, when we compare that to the USD, right? If we go USD JPY, well, look at that. This is going slightly up, but seems to be making lower lows and lower highs, right? We're not making higher highs and higher lows. A Fibonacci here on this monthly chart would show us that, hey, we should expect this to fall down to 135,549 from where we are right now. That's the expectation, right? We also have a kind of a left tip, center tip, right tip scenario as well of a king's crown. And we'll see if that happens. If we look on our daily charts, it just goes to show you, even you can kind of see the pattern even forward, right? We haven't made a new high. We have failed to make a new high, which is an interesting thing. If we look at Great Britain versus the yen, we're seeing this kind of yen starting to gain a little strength here. And you can see we were at, here's a great example from 2000 to now, right? This is just a level of resistance that we're at, and it could push down to a level of support. So that yen carry trade, if it continues to spiral, what that will do is create a liquidity event. Meaning, okay, here's the example. You borrowed $1 billion from Japan and you threw it in the US stock market and you made all of this money. But now their interest rates are going higher. And so you're like, well, this money isn't making me as much anymore. I'm just going to pay them back. Well, what are you going to pay them back with? Right? You got owe them $1 billion. You can't pay them in shares. They won't take your Apples and Amazons. So you have to sell that stock, convert it back to yen, and pay them back. Now, if there are trillions of dollars done this way, what do you think happens if this carry trade gets too high? Again, this is an early warning. This is not saying that, oh my goodness, this is happening right now. We're in it. No, this is something that says, hey, keep this on your radar. Understand what things are on the horizon that could affect the market. Right? Okay. So that is something that you definitely need to pay attention to. All right. So there you go, Jerry. Type in, let me know when you're done with it, because I'm about ready to move on to the stocks for tonight. I'm going to get a few of them ready here. I know that people want to look at MSTR, AMD, CRM, AMD, TS. No, we got TSM and Snowflake. Then I saw earlier Coinbase, Melly, and there was one more. SNDK and AppLovin. Back in AppLovin. Let's see. Micron. And MU. WBD, AGQ, Meta, MSFT. I love it. I love it. I'm a loyalist. Yes, Neil, I apologize about that. And I saw your email. I just had some things come up, personal things come up. But we will definitely, send you an email this week. Okay. I apologize. All right, let's get into some of our stocks here. So first thing I want to do is, Jerry, let me know. Did you get a picture of this? Yes or no? Yeah, perfect. Okay. I couldn't see it all with everybody else putting in their stocks. So let's jump on into it. I think that was it. Yep. Okay, perfect. So let's get into a couple of stocks here. First check-in we're going to take a look at is UNH. So United, they have earnings coming up the next time they report is in January. They already reported, and they had higher than expected numbers, of course. Then the stock market, then it fell, which, look, we're in this trade for a long term. We did get a blue dot buy here. It is under the, it's still technically in the sell zone, so we'll keep an eye on that. I currently own the stock. I own the stock down at 277 is what I bought it at. And then I bought some more shares as well. I think at like 260 or something like that. But my expectation for this is, and my long-term target on this, I'm not selling until at least 580. This is one of those stocks that I'm just going to hold. It, Look, healthcare expenditure is the largest expenditure in the United States. United Healthcare is the largest healthcare insurer in the United States, and even with even if they repeal the Affordable Care Act, then and they do something different. I mean, look, the Affordable Care Act was written in Boston and put in place by Governor Romney at the time, then expanded to the entire United States. And so by President Obama, some people call it Obamacare, whatever. If even if they, do away with that and replace it with like $2,000 health savings account, and people can go buy their own health care, people are still going to buy United Healthcare. It's not like it's going to go away, right? So I'm looking at this as back into the $500-$600 range. Not afraid of that at all. I'm going to love this and double my money on it. We'll take a quick look at Lululemon. This is another one that we are in. We got a buy notification back on Monday, November 24th. And then we proceeded to go from 169 up to 185, 87 and some change, right? High there was 186.69. And we had a little bit of a pullback that Friday. Not worried about that at all. Look, I think 198 is my short-term target. What was my low here? Low 197.67 is my short-term target. So let me put a horizontal line there. And I have the magnet tool on. 197.67 is my short-term target. Long-term target, 328. Just they're a company that is ran well, right? That's just, I mean, Benjamin Graham, who was the famous professor that taught this guy, maybe you've heard of him, his name was Warren Buffett. I don't know if you've ever heard of him or not, but hopefully his name catches on. I think he's pretty smart. But Benjamin Graham taught him, I like to buy great companies at good prices. And that's what I see here. They have a partnership with American Express that's gotten a lot of traction. I'm looking for them to have a good earnings coming up on Thursday. Well, I should say this one quarter, I don't know if they will have the best traction, but what we'll see, because the reward came out kind of in the middle right in here. And so this will be like that first quarter of it, but I'm anticipating this to continue to rally up. The other thing is Q4 holiday shopping, holiday sales. They had great sales this year. And they're looking at, controlling cost and doing things well. They're a great RAN company. In this space, I think they're one of the best. So 198 short-term target, long-term target 329.60. Let's look at, so we did these two today. I'm going to throw them in blue as we get them done. We'll take a look at Zoom. Zoom we bought at 73.10 ZM, and I haven't looked at it since. So let's take a look here. Zoom, again, I'm looking for buying opportunity to 97.03. I'm actually looking for this to just continue up on this rally, right? We've talked about this ad infinitum in our sessions, is that there is a kind of a pattern that we see with all major tech companies. You kind of have this slow going and then initial boom, a sell-off by insiders, a sell-off by accredited investors, and then the last sell-off, then the company goes flat before taking an exponential run back up. You may see this pattern if you ever looked at a chart of a little company called Palantir. Look at that. You see that chart? Fits it to a T, doesn't it? Right? It went flat, ran up. Went public, ran up, sell off, flat for a while, bam, extreme push. And so when we see stuff like this and it's repeated over and over and over and over again, you have to take notice of stocks like this. So yes, they beat earnings when they reported on Monday. 81 cents. They beat by 8.1 cents on earnings per share, and revenue beat by 1.25%, or by $15 million. They are still growing. They are still the standard, and we're using them now. So we better support them. I'd rather own it than just use it. So, look, I think that you may see a pullback here down to 80, and then the next rally to 70 or to 97. But Zoom is one of those companies I'm looking forward to their earnings. We did have a blue dot, and we have blue crossing above red, so we're in the buy zone, and we have buying energy. That's just 3 good signals on it. So just pay attention to it. Look for your optimal entry there. Let's take a look at OKLO. OKLO, we talked about it. It fell down. We've kind of hit that level base. Yes, of course, they were going to miss earnings. That wasn't a surprise to me. But we got buying energy re-entering this stock. When we get a blue dot, we'll get another good buying opportunity in OKLO, right? So we will be looking for, this is down to a wait, and we're waiting on our next trade. SMR. I just recently got into SMR at this low here, like 18 bucks. If you want to wait on a blue dot, wait on a blue dot. I really like SMR and OKLO. I think these two companies are going to be headed back up very, very soon, mainly because of what they do. The small scale nuclear energy companies are a necessary thing when it comes to AI data centers. So we will wait on that for a blue dot, right? So wait. So if you're not in it, then just be on the lookout. The other thing is that there's companies like this where it's like 20 bucks. If I buy a couple of shares, I'm not worried about losing a $2,000 or $1,000 or $500 or even $200, right? If I buy one share at $20 and then it dropped down to 8 and I buy a bunch more there, then I'll be okay, right? I'm not too worried about that. NTLA is another company. I talked about buying them at $8.70. What we saw from S1s that were filed, and for those that don't know, an S1 is what a hedge fund has to disclose when they are buying a massive amount of shares, and they can be reported whenever the company files them. We saw Cathie Wood increase her shares. As a matter of fact, here, we'll go through, look at them. NTLA. So they are a biotech company in a clinical stage genome editing company, which engages the curative therapeutics using CRISPR to transform and edit genes. All right. So they have a drug that is helping cure pancreatic and liver cancer or something like that. I can't remember the exact one it is. But it is a absolutely great a great, sorry, I'm looking for something here. Oh, here we go. Ownership activity. That's what I was looking for. So it's a great what they're doing is showing great promise, okay, to say the least. We saw ownership activity here. We have, I know ARK Fund recently bought Steadfast Capital, Fallon, Goldman Sachs, Jupiter Asset Management, Vanguard also owns them as well. If we go into holder type analysis, you have investment advisors, mutual funds, hedge funds, and brokers, and then pension funds as well. owning a lot of them. And here we go. Number one holder is ARK Investment Management, followed by Vanguard, followed by BlackRock. All of these are, look, they own a lot of the company. That's anything BlackRock, Vanguard, and ARK all agree on, and then throw in State Street, Goldman Sachs, Morgan Stanley. Think there's an opportunity there, right? So the other thing is, again, it's $8.99. Like, if it shoots up to 25 bucks, take your profit. Take your profit, right? So again, not too worried about a company like that. And let's take a look at Amazon. AMZN. And it does have a blue dot. Absolutely. Right. So Amazon got a blue dot on Friday telling us that, hey, maybe buying opportunity. However, the blue line is not above the red line yet. So you don't have to take that blue dot. Look at this company. They did beat earnings. Fantastic. I think so here's a latest update. Maybe this will help you a little bit. On Black Friday, online sales hit $11.8 billion from last year, and Amazon sees a 3% rise in the sales the week after Black Friday. So we could see another rise in Cyber Week here, right? With Amazon deals and all of that. If this, again, this is an easy play for me. The other that you can do is, if you don't want to put in a whole bunch of money, AMZU. This is a 2x bullish share. It's at $37.62. If it goes to 40, 42, lock in some profit. Right. And here's the thing, when I say lock in profit, somebody asked me this in an email. What I mean is that, like, okay, let's say I enter here and then the market rallies up to 44. Well, what I'm going to do is I'm going to move my stop, and I'm going to make my stop loss be at, let's say 40. Right. So the worst thing that happens to me is I now make $3 a share. And then if it goes to 45, I may go up to 42. If it goes to 40, if it goes to 50, I may go up to 45, right? And just slide my stop loss up, just trailing it. And then I can sell half of the shares or a quarter of the shares just to be able to lock in my profit. So we talked about them. That is still a buy at, if you wanted to take that. Then let's take a look at PPTA. I haven't looked at them in a while. PPTA. They are a mining company. Told you guys to buy them back in a while ago. Now they're back at 25. They're sitting from 23 up to 25 plus right now. Things are going. Look, it's Peter Thiel's company. They still beat in revenue, loss on earnings per share. This is going to head back up. They got new mines opening up. This is one of those companies that definitely be in if you can. We bought them in October at 25.32. They're back at 25.74. Let's take a look now at MSTR. So MSTR has a Bitcoin play, right? We know they're a massive holder of Bitcoin. Well, I don't know if too many of you guys have heard about this. Give me 1 second. So when it comes to Bitcoin, Bitcoin for America Act was introduced to Congress and the SEC's upcoming meeting on December the 4th. You had Jerome Powell in his latest message saying that banks are free to transact in Bitcoin. Okay. Banks are free to transact into Bitcoin. And let's see. But we're seeing we're also seeing that on December 4th, the SEC is discussing the tokenization of equities. The tokenization of equities, which, look, is a massive holder in Bitcoin and a massive crypto company. MSTR, ripe for taking advantage of an opportunity like that. Right. And at 177 bucks, I mean, you're you're getting a great price on a good company. Okay. 177 bucks, you're getting a great price on a good company here. So I would be looking at option plays. I would be looking at, or, ownership plays as well. Maybe both, right? Maybe own a few shares and then trade a few options. So, Sharon, they, so Jerome Powell, I didn't say that, right? Jerome Powell said banks are free to transact in cryptocurrency. Now, what that means and how they're going to do that and all the regulatory framework has not been built out yet for that. But even the government is considering receiving tax payment in cryptocurrency. Now, there is another company. Give me a second. I'm going to bring this company. I'm going to find this company really quickly. And I actually just recently invested in them. And for those that don't want to trade in cryptocurrency, I totally get it. Don't have to trade around companies within cryptocurrency as well. That's totally fine. Up to you. Here it is. ABTC. ABTC. And that's the American Bitcoin Corporation. ABTC is the American Bitcoin Corporation. And if we go over to ABTC, so you can look at it. So, American Bitcoin Corporation. Why is this summary popping up? I don't know why it's doing that. But engages management of Bitcoin accumulation platform. It offers exposure to Bitcoin through industry first business model that integrates scaled self mining operations with disciplined accumulation strategies. The company was founded by Eric Trump and Donald Trump Jr. in 2018 and is headquartered in Miami, Florida. Wonder if, they get a little benefit there from anything, little inside info, right? A little inside baseball there. So you have Eric Trump and Might Advisors and all sorts of, interesting ownerships things. You have all of these smaller hedge funds and things like that owning this company as well. Nothing massive yet, but it's one of those companies that you just look at ABTC and you say, well, it's $4.24. If I buy it at 424, great. What this would be considered is the picks and shovels of the gold era, right? The picks and shovels of the gold era. So feel free. Let's see. Priyanka, absolutely. So this is one of those companies that you would want to look at, maybe invest a couple of dollars in, right? I mean, it's $4.24. If you bought 100 shares, it's $424. If it tanked and went to zero, you lost 424 bucks. Or buy 10 shares, you lose $42. You lose that in gasoline every week. That's like what, one order at Starbucks these days? I don't even know. I try not to go there. I like 7-Eleven coffee a lot. But let's keep it rolling here. So that's MSTR, right? I like this company. I think I am a buyer of MSTR, a buyer of ABTC, and a buyer of NTLA. Right. So NTLA, I'm moving up into, these are stocks that own, and own, and I'll set in those prices, these are all buys. And today is 11:30, 11:30, 11:30. And 177.18, 4.24, and 8.99. Those are those companies. All right. So we'll keep we'll keep an eye out on those. So let's go into TSM here. So Taiwan Semiconductor, we did get a blue dot. We do have buying energy. However, we haven't seen the cross yet. Again, they're manufacturing chips. They're exporting chips. There's still a demand for chips. Chips aren't going nowhere. So go ahead and look for the opportunities to buy this when you can, right? Like if we could buy down here in April, man, oh man, would we be excited. Let's take a look at Coinbase. Coinbase, again, this is going to be one of those companies that'll just benefit from this long term in the future. So you buy, you hold on, and you get this great benefit from Coinbase in the future. I think Coinbase will be one of those companies that is a large brokerage. We got the stop. We hit support here, but we do have a little bit of a gap down at 215. So if we get the blue line crossing above the red, that's when I would buy. I wouldn't buy right at this moment, right? We're kind of in no man's land. If we get the blue line above the red line over the next couple of days, that's when I would give my go ahead to buy on Coinbase. If you're in it now, just keep holding it. It will most certainly come back. So we covered that one. And let's go. We covered TSM. So let's look at Salesforce. They're not going anywhere. They're still a powerhouse of a company. They have taken a hit because of the acquisitions that they've made over the last number of years. But honest to goodness, I wouldn't be too fearful of them. There is a gap here down at, well, nope, that gap was filled back here. So we're just looking for the first buying opportunity if you want to buy it. Right? We don't have one yet. We don't have the blue dot yet. We have buying energy. We don't have red above blue line. We're still in kind of the sell mode right now. So we're not taking that buy just yet. Then let's go AMD. AMD looking at, again, this gap down here at 171.44. Yes, they had a huge earnings. Yes, everything was great, but market hates gaps, and we're probably going to see, this thing continue to fall down to 170-ish. And if we get it at 170, that's when I'll take another bite into AMD, but I'm not looking at it before unless I get a lot of reasons as to which I could not buy, right? So let's go into Snowflake. Snowflake, I've always been a big proponent of Snowflake. I owned it at like 25, sold it at like 200, and wish I never did because my goodness, it just is what it is, I do think that though this gap will get filled down here at 202. Probably a miss in earnings or something like that will be its driver. They're just not growing at the same rate as like a Palantir because they didn't win the government contracts like a Palantir. However, I still think that it is a good company, great ran. We're just not seeing it's living up to its potential. So if we get a pullback down here to 223.60, that's something that you need to be paying attention to. And if we get down to 215, 202, then we have a good buying opportunity on our hands there. Let's keep it rolling. Sorry, I got in the zone. Priyanka, thank you. Thank you for so much for that. And absolutely, I definitely will be. Um, Jerry, yes, it does. That is true. Melly, let's go. Melly, Meli. Let's take a look at them as well. What do they do? Yes, they are the e-commerce for kind of the Latin America region. So they are the Shopify of Latin America. Um, they have taken a hit. However, we did get a buying opportunity on them on Tuesday. Saw the rally. We haven't yet gotten into the buy zone yet. So we will see if we get into this buy zone and it continues to rally up and we break through, you know, the first area I'm looking to buy this would be 2106. I know that's $30. If you're trading it on a shorter time frame, that's well and good. You can go for this $30. But for me, looking at a long-term play on this, I'm not too interested in buying it at under 2106, mainly because that's a hard level of resistance. And if we get above 2106, great. Then I know we're going to take another run up. If we don't, then I know we may either hover around that level or range trade for a little bit until we have our next breakout, one way or the other. Let's keep it rolling. Appfolio. Oh, that's Apple. AppLovin. What am I thinking? AppFolio. That's an old CRM for property management. AppLovin buying opportunity here. 5.99 began to shoot up. This is hey companies like right sizing themselves back into this position, and hopefully we get another run up to 648. If we get to 648, I would be putting my stop loss at like 630. And if I get stopped out, great. I made a bunch of money. Once we break above, and I'd have a pending order at 648, 649. Because once we get back above 649, then maybe 750 is back in the target. We did fill that gap just like we had talked about a few weeks ago. I love that, and now it's all the way, but it could be continue to go up, right? Could continue to go up. Only time will fully tell. Let's go Micron. And Micron is just similar to TSM, right? There's no real difference between the two. All the tech sectors looking the same right now, but we did get into the buy zone and we have a blue dot buy. I mean, that is a lot better. So there's your buy, 236.48. This week will tell. 236.48 is already a buy on it. So let's go Meta and Microsoft. I want to look at those two, and I want to look at Google. Meta here. Meta, we had a buy at 635.68, headed up to 647.95 as of Friday. I think 742 is going to happen. Yes, they missed earnings. They've been doing a lot of CapEx investing. They've been doing a massive amount of investing into the hardware side of things, and their devices are better than some of the tech companies out there. They're cheaper, they're made better. That's why Apple is in a partnership with Meta to redesign Apple's vision goggle things, their 3D goggle things that were overpriced. Because Meta has Oculus and they've been doing it and been doing it at a cheap way and doing it better than everybody else. So once Apple and Meta partner up, then you have Meta making their own glasses, and then Google is partnering with Warby Parker, right? So that's a company that you would want to pay attention to as well. Warby Parker may be a great company to buy. We did get a buy on them at $17.41. The reason why is Google is co-developing a augmented reality AR VR glasses that you could buy from Warby Parker. Parker is the cost control company in that space. They are the Walmart of cost control when it comes to their glasses and manufacturing. They are amazing. I'm also wearing their glasses right now on my face. So it's all I buy from because I don't believe in overpaying for Luxottica every brand, right? When it comes to these things. I'm a big believer in Warby Parker. I think this is going to be a huge opportunity. Definitely fewer in the big crashes, but I can tell you Priyanka, that when that happens, right, there's still ways that we'll be able to go short and make a ton of cash. And so look, Warby Parker, $19.81. That's a stock that I am interested in. WRBY. 1130, 19.81. Ooh. And buy. GOG, we'll take a look at them as well. Google, and this will have to be the last one I roll through tonight because I'm late for my next meeting. 320 here. I think Google is a great play. I'm looking for that 305 to 295 mark, somewhere in there is where I'm looking to take my next little bite of Google here to continue to build a position in Google. I think they are just going to continue to grow this TPU model, and more companies will gravitate to that. More and more companies will develop partnerships with that. More and more companies will get on board with that. So look for Google. Let's take a look at Microsoft, MSFT. And if we look at Microsoft, this big gap is what has me worried on Microsoft. You don't get a gap like that without it getting filled. I'm just telling you. Right? Microsoft has been riding high on its Copilot and stuff like that, but Copilot has been left in the dust, folks. Microsoft Copilot is like using a bag phone today. Many of y'all remember those bag phones, right? That you could put into the car and you could carry around with you, and had to stick your antenna on the roof of your car, right? Is Copilot is just it is like when you look, there's and next time I'll try to prepare this, but there's actually like a set of benchmarking tests that people do for AI. And that benchmarking test, right? That benchmarking test, Copilot is, I hate to say this, it is literally the worst performing AI model. So it is literally the worst performing AI model. RGTI, really quickly, RGTI. We did get a blue dot buy on it. We do have buying energy. We did have a bottom line beat of 12 earnings per share, but a 10% miss on revenue, right? That's a big thing. I think Rigetti is gonna find a base, and what I honestly am waiting for Rigetti is I think we're gonna have a consolidation play. It's probably going to consolidate between 21 and like 32 for a while. Because while we are moving towards quantum computing, and quantum computing is making leaps and bounds, the cost is just so exponentially high. What's going to bring down that cost is artificial general intelligence. So if we get AGI, then we will see quantum computing rally massively. And then that's going to give you a good opportunity there, right? So that's going to give you. Sorry, I'm just catching up to one of these comments. Dennis wrote, Copilot, the demon of AI. Absolutely. I love it, Dennis. My man. I love that. So good. So I think Rigetti is going to be a great one to build into. If I own some shares, I would own them for a long time. But I'm waiting to see where we settle this range at, right? And if it trades in that 21 to 32 space, I'm going to love it, right? I think we can buy, sell, and make great money there. We'll do one last one on silver here. Silver, again, I still see some great opportunity in silver. I'm not loving, this gap right in here. So a little bit of a pullback could absolutely be expected. Let me plot some fibs real quick. Even though I do have an automated fib tool in this, but whatever. Run there, boom. So we're at natural level of resistance at 51.42. So maybe a 20-cent move up, maybe the next wave, I would look at silver kind of like a little move up, maybe 52.51, and then back it down, a bounce off of that level of support, and $48 becomes my new level of support. I'm still a buy in silver. I've been a buy in silver since like $14. Continue to buy silver. I own physical. I own this, the SLV, and I trade in futures on silver. So I'm a big, big believer in that. All right, guys. I am now 17 minutes past for another meeting I'm supposed to be in. I do apologize, but I will have to go. I will get this converted and posted, and I will see you guys up in a webinar this week. I do have one Tuesday night. I will have one on Monday. I will have one on Tuesday, and I will have one on Wednesday or Thursday. But if you want, I'll be sending those links via Discord. So jump into the Discord channel, and I'll see you guys. Have a good one. Thank you so much for staying. Appreciate you all for coming every week. And I look forward to seeing you guys next week. Thank you.